Hey guys, we're back. Another weekly options update. It's a short one this week, but I do got some things I want to talk about. I put on a position to kind of an insurance position, and I'm gonna walk you through it. But really, uh, it's been a bad month of January. Anybody in the stock market will tell you that. I am no exception. So I'm kind of in a holding pattern. We're waiting for things to turn around, and hopefully they do. In the meantime, I'm doing some things to generate some income. We're rolling a couple of things, rolling up some covered calls. We'll talk about that here, and then we'll talk about the insurance thing. And then what I want to talk about too is kind of the big picture, kind of a feel good thing to hopefully some that are in options can take heart to. All right. Anything to make you feel better. So at this moment, we got, it was a 4-day week, right? So I only have from the 14th and the 18th. So I only did trades on Friday and Tuesday. And basically, we'll start with Friday. I closed out the call side of my Camping World Strangle for 10 cents, profited 23 bucks in 2 weeks there. I closed out my stone call and I rolled it down because I'm trying to get rid of it. Actually, yeah, that's what it was. I believe it was a long dated one. Shoot, I forget how this went. There was more premium, and I think that's why I rolled it up to the next week and got more premium for it. So I closed that one out, $31 loss in 4 days. Palantir closed out 2 covered calls there for 41 cents. Profited $20.37 there in 4 days, and I rolled those to the next week as well. Fubo closed those out for 4 cents, profited $51 in 4 days there, and rolled those out to the following week. And on Tuesday, I closed out those ones that I rolled them to. So I opened these on the 14th and closed them on Tuesday. So Fubo, I was able to close that one out for 19 cents, so $21 in basically 1 day, because this is counting weekends too. We had a 3-day weekend. So $21.62 there. Stone closed that one out for 43 cents, so profited $71 there in a day. And Palantir closed those two out for 29 cents, 82 bucks in 4 days. And I reopened those for the following week. And that's all I done. So I reopened those for the following week, and we'll go down there and look at those. And those are the 3 that I already closed out, and that I opened and closed. Right, opened on the 14th, closed on the 18th, and these are the ones that are currently open. So Fubo, 1350 strike, collected 43 bucks. That's for next Friday, not this Friday, next Friday. Stone, 16 strike, collected 73 bucks. And Palantir stayed at 15, the 1550 strike, and collected 52 bucks a piece, so 102 bucks there. Now, we're talking about insurance. And stay tuned, because I'm going to bring you into Interactive Brokers to try to make sense of this. This is something I wanted to put on. I was looking for some sort of something with downside protection that wouldn't cost me anything, right? That I could preferably get paid for to put on, and wouldn't take up very much margin impact, and something I can just set aside and leave there. And I kind of accomplished that all here. Now what I did was I bought 1 put and I sold 2 puts on QQQ. And the first one, I bought a put, a $340 put out to June 17th. Now, let me preface this. I'm not saying go out there and do this, because I have no idea how this is going to work, how it's going to look, what's going to happen, in the next 5 months or however long. Yeah, about 5 months. So I'm just going to set this aside and I'll take a look at it and see if I update this once a month and see how it's going. But I bought the 340 strike for $1,423. I sold the 335 strike for $1,297. And then I sold the $260 strike for $285. So net, this paid me $160 right now to have this position on. And what this does is it gives you about a 30% downside cushion on that position. And so if it goes up, the max I can do is 160. If it goes down, I'll show you what the max profit is. Beyond 30%, it gets a little ugly. But 30%, I'm fine with that. What would end up happening at 30% is this 260 would come into play, right? And you'd take shares or roll this out at that time. At $260, I'd buy QQQ all day long, and next week. So that's that. Let's drop you in real quick before we get to premium cooking and look at this trade. I'm going to bring you into Interactive Brokers here, and we'll see if it'll let me put it on, right? So if not, I have a screenshot of it. So we did the QQQ June 17th, and we bought the 340. Oh, it's not. We bought the sometimes Interactive Brokers, their data connection, especially when the market's closed, is real funny. So let me see if I can reconnect and see what happens here, if that takes care of it. If not, I did do a screenshot. All right, we're going to have to do a screenshot. Yeah. So let's go to the screenshot real quick. Where did that go? Screenshot, boom. Okay, so what this is showing you is you bought the 340 put right here. Let me scoot this over just in case my mug's in the way. You bought the 340 put, you sold the 335, and you sold the 260. Now this is long dated, right? So what you'll see down in this chart down here at the bottom, the current underlying price, $370. So if it goes up 10%, all you make is the premium received. I received 160 here. If it goes up 20%, that's all you make is the premium received. It goes up 30%, that's all you make is the premium received. But at the time of expiration, if QQQ goes down 10%, say it's trading at 333, you get 642 in profit. So you not only get the premium, you get additional downside protection. Same with 20%, same thing. Even if QQQ went down 30%, that's at the 260, you'd still profit $600 off of this trade. Now, like I said, at 260, I'd be taking those shares at that point. But what this does is it gives you a chance to go 30% down, gives you cushion that if the market were to go down 30%, you would make additional money. So the upside doesn't hurt you here, and the downside only hurts you basically beyond 30%. And if it's beyond 30%, you would be taking these shares anyway. I'd be happy to at that point. So they say max loss here is 25,000, and that's just if QQQ goes to zero. That's where the max loss comes from, and it's obviously not going to go to zero. So your break-even point here, so you can go down all the way. QQQ can go all the way down to $253.58 for this position to actually break even, right? You don't make any money, you don't lose any money. $253.58. Not too shabby. And you see the margin impact right here of $609. So I got paid to put it on. Very low margin impact. It is very long dated though. I don't know how that's going to work out. We'll see. That's why I put it on. And the break even is extremely low at $253. You're telling me I can buy QQQ under 260? I'm happy as a clam with that. So that explains that portion of it. I'll try to update it like once a month or something. And we'll take a look at it and see how things have gone. So now let's take a look at premium cooking. So currently, only closed out 7 positions, only opened 8, and some of those are the same, right? Because I sold some on Friday and opened them on Tuesday, and then closed them and opened them again. So a lot of those are just rolling those covered calls up and out in date anyway. Profit realized $237.38 for the week. Premium sold $265.20. Total premium cooking $4,819.72. Maintenance margins kind of creeping up there at $23,700. Buying power usage of 20.22%. Cash balance has grown $113,589. Net liquidation has dropped dramatically this year so far, year to date. We've gone from 123 down to 117. Return on maintenance margin, that's the net profit realized divided by the previous week's maintenance margin. So that was a 1% return there, and a 0.2% return on net liquidation. So that's the profit realized divided by last week's net liquidation number. Now, I promised something that possibly, to make you feel better, right? And some of these, keep track of your net lick and see how far you're down and compare it to the market, right? I compare myself to the market. I usually compare myself to the NASDAQ and the the NASDAQ and the Russell 2000. But I added something in here to compare it to all three, the S&P and everything. So I got to figure out a better way to do this. But here's a percentage decrease calculator screenshot. So we started the year 123,100, and right now we're at 117,200 in net liquidation for a 4.79% decrease for the year so far. And I wanted to compare that. This might make you feel better anyway. It makes me feel a little bit better. S&P 500 is down 4.58, so I'm not beating the S&P 500. The Russell 2000 is down 7.76% year to date, so I'm beating the Russell 2000, and the NASDAQ is down 8.37%. I'm almost doing 100% better than the NASDAQ. Look at it in a big picture. It might make you feel better. Like I said, short, quick one. Wanted to share that insurance one with you. Hopefully everything turns around. Looks like we may be testing some support levels. I don't know how far down. We might get a bounce here soon. Let's hope for that. And if it does, then, a lot of us will be in a lot better shape. So hope you guys enjoyed. Happy trading. Good luck this week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.